That was my stop loss. I'm just trading towards the money. I am not liquidity. I'm part of the liquidity gang. What is that?
Guys, I need to switch up my clothes so they won't recognize me. I've been running from those retail traders, man. Them retail concept traders been chasing my ass. Ever since I've been sharing some knowledge on YouTube, they've been chasing me. All I keep on hearing is, he belongs to the two.
What is that?
He belongs to the two. That's all I've been hearing these days, man. I just snuck behind my mentee's back just to give you guys this information. I've got my hoodie up right now, so hopefully the retail traders don't recognize who I am. Liquidity gang, I just need to give you guys this information. Seems like I lost them. Okay, guys, let's get into the video.
So like I said, I've got my hoodie on because these guys be finding me everywhere. So hopefully with this hoodie up, these retail concept traders won't find your boy. Guys, we're going to be breaking down gold today. Once again, I didn't want to do this, but I thought, you know, I just have to do it. I just have to go in on this and let people know what the deal is over here. We're breaking down gold right now, and I'm going to show you guys, as you guys know, what retail concept traders see compared to what smart money and institutional concept traders see on gold right now. So let's look about what retail concept traders saw on gold. And look, before I even go into this, don't be telling me that you wouldn't have done this. Don't be telling me that you wouldn't have traded like this, because I know tons of retail concept traders. I was doing retail concept trading for tons of years, and look, we were all doing the similar things. So listen, don't be telling me that you would have done this and you would have caught this. There was one person who messaged me on Instagram and said they saw a similar move to mine, but they saw like double tops and engulfing candles, and they took it and they won. Look, hats off to you. Not all retail concept traders be moving the same. If you're a retail concept trader who's winning, then keep on winning. Look, I'm all for you. I love you guys. I love all of you retail concept traders. So I've got my annotations off right now, and I'm going to show you guys what retail traders would have seen on gold. So if I just zoom out, price is making higher highs and higher lows, and then you can see price is making lower lows and lower highs. And so that's just common. Everyone's going to be able to see that. And then it gets to this point where lower lows, lower highs, we make another lower low, but this time we start burning through these highs. Instantly, alarm bells are going to be going off from retail traders' heads, and they're going to be thinking, if we're breaking above these highs now, then they want to get bullish. Let's jump in, guys. Let's get bullish. Hold up, G. Hold up. We have to wait for the retracement, bro. Yeah, calm down. I know you're eager, but calm down. We need to wait for that retracement. The advanced retail trader would have said, you know, just slow your boats. We need to wait for a retracement. So I'm gonna give you guys the benefit of the doubt. Just forget all this little break and retest stuff up here. I'm trying to catch this above these highs. You play yourself. We're gonna be looking at what happened when price retraced. We're looking at this little portion of price right here. Now, when it comes to this, you can see prices making higher highs and higher lows. Eventually, it starts retracing. And so retail traders are going to be looking to get some kind of entry near about the 61 Fibonacci. They're taught that when price expands and then starts to retrace, that whip out that Fibonacci tool. That little whip sound, just whip out that Fibonacci tool. Let's just cut this for a second. Really and truly, I'm talking about myself and my retail trading days. If you didn't trade like this, you didn't trade like this. Me, I was all over this thing. So not only are they going to bring out their Fibonacci tool, they're also going to drop some support and resistance levels that price could respond off. This is what I have right here. I've drawn up a few support and resistance levels that retail would have been looking at the time. And you know, there would have been multiple, but this is just a few. The Fibonacci tool from the low to the high. Ideally, what retail concept traders like to do is they like to enter from the 61.8 Fibonacci. This is the zone. Once it taps into this level, you better be buying. This is what we're taught. We're taught that this is the entry level, and this is where we want to see price push up from. Now, let's zoom in a little bit. Don't forget, we're trading above the 61.8 Fibonacci. Now, when we zoom in, we get this kind of consolidation here. When price is consolidating here, what they're thinking again is that we're holding up over here. We're holding up over here. And so this is most likely where price is going to take off from. And then from this level over here, they get a break above this zone. You know, you see, look, the wicks, you see all these different wicks. This would have been seen as some kind of support resistance zone. And when price broke above, they would have been thinking, okay, cool, it's time to get bullish. And then not only that, they were given their retest of the zone and then a rejection. I'm on a 50-minute time frame. Some of them like to use 50-minute time frames as a confirmation. So if you get a 50-minute candle rejection, that's a lot stronger than a 1 minute or 5 minute. And so a 50-minute candle rejection would have been nice for them. And so they get their rejection. They jump into trades from this level. They probably put their stop loss beneath here if they're eager, if they're zealous retail traders, and if they're a bit more conservative, they put their stop loss beneath this consolidation. And they'll probably target one of the next zones, so either this one or that one over here. If that's you, because I did get a lot of people coming out to me and saying they would have targeted the most recent zone and they would have been out. Look, well done. That's amazing. That's good. But the majority of retail concept traders don't behave like that. They want a bit more. So there would have been two types of traders here. There would have been the person who jumped in off of this rejection candle, and they would have either targeted the high or maybe some kind of 1 to 3. So let's just say 1 to 3. They would have targeted something like that, or they would have targeted this high. There would have been another trader who jumped in off of the retest, because you know that's how some of them do. And they get the retest, they would have put their stop loss beneath this level here and maybe targeted a 1 to 3 or this level over here. And then there would have been the final person who would have jumped in off of this rejection candle with a stop loss all the way down here beneath this level here, like a 40 pip stop loss. And then they would have targeted this high over here for some kind of 1 to 2 or 1 to 3 hour trade. But after price hit the zone, it was struggling at the zone for quite some time. It gave people the opinion that price was going to respond off of this. Another thing they look at is how many times it's attempted to beat a zone, and if it keeps on failing, then they expect price to just drop. And as you can see, look, they attempt, they keep failing, you know, with all these different attempts. This one too, they don't break above the zone, and so they're going to be anticipating some kind of drop back down again for price to respond off of this level again. Price gets to this level here, they would have moved their stop loss into some kind of profit. So those people that would have entered from this retest would have moved their stop loss to break even. Those people that would have entered from the engulfing candle or the rejection candle, they would have moved their stop loss into profit. And as you can see, they would have constantly been tapped out, tapped in. And then with the final blow, they would have been taken out with this push down lower here. Let me just zoom out a little bit. It doesn't end there. So after they got the response off of this level and that massive push up, they would have seen this as a very strong zone. Look at that rejection candle. Look at that response off of the zone. The response of this level was so huge that it would have made them think that, cool, we're either going to miss this trade or we're going to wait for that retest. So this massive response off of this level over here, this would have got traders chasing the trade. They would have seen price break above these different support and resistance levels, and they would have ended up chasing the trade. There is the type of trader who waits for the retest, because retail concept traders believe heavily in the break and retest. I've hit play a couple more times and you can see one other thing now. So now they have equal highs. These equal highs are going to be a bearish sign to retail traders, and this is more so of a confirmation for people to go short. And so they're going to start thinking about going short at this level now. We've already had manipulation of all kinds of stop losses with this push down, because these are big moves, by the way. From this level to that level is roughly about 65 pips. Best believe you would have moved your stop loss. So I'm going to hit play a couple more times, and don't forget, so there are going to be some folks who are still looking for a retest at this level down here. Cool. So that sell signal, as you can see, gave them a piece of the pie. This is a massive zone, huge zone, from this level down to this level, 80 or 90 pips, a beautiful amount of pips. It took them straight to the zone for a break and retest entry. And then if I hit play a few more times, everyone who was selling at this point would have been stopped out with this wick. Those who bought from this level would have won a decent trade. I think that was roughly about just over 100 pips. And so look, retail need to eat. Retail needs to eat. That's 120 pips right there. So now you're seeing price breaking above zones. So they're going to be thinking, okay, now price is getting bullish. We were so right. We had a triple low confirmation. That was the one. We had a break and retest and then another break. We're in the trade at the right time, at the right place. But don't forget, if they're expecting another higher high, they're going to be looking to hold onto this level over here. This is where they're going to be looking to hold the trade to. They are bullish at the moment. Everything is giving them bullish signs. We've retraced and now we're expanding. We've beaten these highs. So look at this lower low, lower high, lower low, lower high, lower low. And then we break above this high and we break above this high. And so they're thinking, okay, it's now time to get bullish. Now I'm going to play out what happened. So now you can see what happened. See all these different support and resistance zones? Every single one of them got violated. The people who never closed off their position from the support zone, they got taken out the game. They got taken out. And for those people that thought, you know what, I'm good. Look how low I got in. I got in from this consolidation and I'm still in this trade. Nope. They came into Q out too. So this is why it's vitally important when you're doing retail concept trading that you need to be taking profit quite quickly. And if you could do that, you can potentially have some really good trades. But if you're one of those retail concept traders who like to hold, just like myself, when I was doing retail concept trading, I'll be holding trades. I'll be holding trades all the time, like constantly getting stopped out. Now I'm going to show you guys what institutional or smart money traders were seeing at the time. So here's what smart money and institutional concept traders were seeing at the time. So yes, we might have been of the same mindset that we wanted to see price go higher. generally what tends to happen is retail normally go long first. So they get their early signs that price wants to go, and then the stop losses normally get hit, and then price normally goes. Yes, we were of the bullish mindset. We wanted to see some kind of retracement first before going long. I'm going to bring out the fib tool now just to show you guys why I wanted price to go a bit deeper. I wanted price to go a bit deeper than what they had given me here. So I've got this fib tool out. And you know where retail would have been jumping in. They would have been jumping in above the 61. But we wanted price to go even deeper. We wanted price to go even deeper. And the reason being was because we know that when there's an expansion, price needs to fall back down into a discounted price. We know that when price drops within a discounted price, we know that we should be looking for a point of interest within that discounted price. And so the reason I have the fib on is to show you that price hadn't even dropped into a discount. It was more so dancing around equilibrium, which is 50%. So I've got rid of that now. And now, what else did we see? This was a confirmation that price wasn't done dealing with the sell side liquidity. We had these lows right here, these equal lows, and then when price came back down and then responded off of this level with some good speed, we saw that there was triple lows here. And so you guys know what's beneath this level. We know that there's going to be money resting down here, because when people see this, when people see triple lows, they get excited and they jump into all kinds of buys. At every single break and retest, there's going to be more money placed down here. So this is going to be more liquidity for us to run into our entry. And so when price is doing all of this, we're obviously looking to the left. We're looking at this massive down close candle that ran liquidity to the left. And so this is potentially where we want to see price get to, this down close candle. So if I bring out this Fibonacci tool now, and don't worry about trying to enter from a Fibonacci level, this is not what I'm talking about. And now you're going to see that price didn't even drop into a discounted price. And so really and truly, there's no reason to be going long at this point. When price does not drop into a discounted price, then most likely that low that it generates is going to be a low that's used for some kind of liquidity. And so I'm looking at all of this. I'm seeing these triple lows. I'm anticipating them to generate more liquidity, given the opinion that price wants to go higher at this point. When it comes to this discounted price, you want to have a point of interest within the discounted price. And so for me, the point of interest was the 50-minute imbalance from this level here to that level there, from this week's high to this week's low. We're at a 50-minute imbalance. And so this was my point of interest within a discounted price. So these triple lows, I wanted to see price run the triple lows into the imbalance before looking at going long. So you can see that we've run out that liquidity, we've burned through the 61.8 Fibonacci, and we've tapped into the 50-minute imbalance that's within the discounted price. Before we move on, I'm going to go ahead and delete these fibs now. And now I'm going to show you guys my entry, my sell entry for gold that was used to run out this liquidity and tap into the imbalance. You see these highs over here? My sell entry came from up here. So I'm going to go down to the lower time frame now, to the 1 minute time frame, to show you guys why I actually entered from there. So I'm in the 1 minute time frame now. So you can see these highs, all these highs were taken out with this up close candle here. This up close candle ran all these highs. Then when they broke back beneath and then retraced back up, I entered here with a stop loss above the high, and I took it straight to the imbalance. I believe my stop loss was roughly about 10 pips. So here's the position that I was in. So I'm in a 1 minute time frame. This is where I entered, and then I put my stop loss above the high that was used to run out this liquidity, which was the up close candle, and I took it straight to the imbalance for a nice juicy 1 to 17R trade. Absolutely beautiful trade. Now back to the 50-minute time frame, you can see now, after price is tapped into the imbalance that's within a discounted price, this is most likely where it's going to move off from. This is most likely going to be the real move. So now I'm going to go ahead and X out the whole replay mode to show you guys where gold is right now. So now you can see what's happening. Gold responded off of this imbalance, and now we're pushing higher. Now we're getting the real push. And then the agenda is this high right here. This is the agenda. This week we should see gold run past this high. So knowing all of this is vitally important to know that whether you're low when you are bullish is going to be a low that's going to hold, or whether it's going to fail. One of the best ways to know is that if price did not drop into that discounted price, it's normally a low used for liquidity. When you get these triple lows that's above a discounted price, price is going to run that low. You just need some patience for price to run that low, and then look about getting your entry at the discounted price to then run the high. So that is the difference between what retail concept traders see compared to what institutional and smart money concept traders see. Peace.